Hey, good morning from the middle of America. This is Ohio Real Estate. And thank you so much for joining me today for our weekly ritual of the Redfin update. We're going to slice and dice a lot of the Redfin data, and uh, we're also going to take a look at a deep dive into inventory, into housing inventory. And people want to know what's happening with the housing market, what's going on with it. Well, I can tell you what's up is inventory. So it's a good day to deep dive into the inventory, active available houses for sale across the U.S. But inventory is up a lot. I mean, I just looked at the stat, and if you look at the top 100 metros, inventory is up all metros, in all top 100 metros except just two. So in only two metros, if you look at the top 100 across the US, inventory is actually down year over year. So it's basically up in every metro across the US, and we're actually seeing some prices start to soften as well. So this is the agenda for today. We're going to review the latest Redfin update. That's the normal update. We're going to look at national numbers. Then we're going to look at Columbus numbers because I am just outside of Columbus, Ohio, where I work as a realtor and investor. And then we're also going to do something different. We're going to listen to a few clips from the CEO of Redfin, Glenn Kelman. So the CEO of Redfin came out and basically said, "Hey, home prices are probably going to soften this summer, not necessarily, in 2025 even." He's talking about this summer, 2024, home prices will probably soften. So we're going to listen to a few clips of an interview he did with David Lynn. And then we're also going to take a deep dive into inventory. Like I said at the beginning, we're going to look at a map and some spreadsheets of uh, national home inventory of active homes for sale, because what I'm seeing is pretty eye opening. I mean, there are major differences between 4 years ago, 5 years ago, and just this month. Some major differences in the number of homes that are for sale. And then lastly, we'll take comments, but we'll take comments probably throughout the whole live. So if you have any comments and you're watching this, questions, updates as to what's happening in your market or thoughts as to the material, please chime in. People want to know. So, all right, let's get started. We're going to start with the normal Redfin update. All right. So you'll notice in here, I highlighted just a few sections of this article. Not going to read the whole thing, but home prices, according to Redfin, have hit another record high. So US home prices hit another record high, but mortgage rates are starting to decline, which should give buyers relief. Okay. I don't know how much they're declining. I mean, I know how much they're declining. I don't know if it makes a huge difference, but psychologically it could. Rates are now just below 7%. And so a lot of people were thinking, hey, if they hit under seven, if they stay under seven, if they hit 6.75, I think Michael Zuber on One Rental at a Time says, hey, 6.75 is his call, that they'll actually drop, that'll actually add, buying demand to the market. And that's kind of the tipping point. So right now it's just under 7% when I checked Mortgage News Daily. So they say the median US home price hit an all-time high of $394,000 during the 4 weeks ending June 9th, up 4.4% year over year, the biggest increase in about 3 months. But there are signs that home price growth could ease soon. Asking prices have leveled off, and 6.5% of home sellers are cutting their asking price on average, the highest share since November of 2022. Prices are already declining in four major U.S. metros: Austin, Fort Worth, San Antonio, and Portland, Oregon. So, comment below. Let me know what you think. Are home prices dropping in your neighborhood at all? Are they? They're not where I live. I mean, people are cutting prices, but like the median isn't dropping. Um, the homes that are closing are still selling near asking price. So they're not dropping yet, but there is more inventory. There's no doubt about that. So I'll read another highlighted section here. The latest inflation report is good for home buyers because it has already sent mortgage rates down. Though this week's Fed meeting will temper mortgage rate declines, said Chen Zhao, Redfin's economic research lead. But on the other side of the coin, if lower mortgage rates bring back more demand than supply, that could erase the possibility that home price growth softens and push prices up even further. Lower rates and higher prices may ultimately cancel each other out when it comes to home buyer monthly mortgage payments. So, what they're saying there, and they talk about this a lot, is that, hey, if more because mortgage demand right now is low and because buying demand is low, if rates drop too much, it's going to reignite demand, right? It's going to reignite people coming into the market and paying, asking or over asking for houses. And that's just going to make prices go up more. So if rates come down, but prices go up, then that's kind of a wash, right? And the mortgage payment really doesn't decrease. And I agree with them. I think the monthly mortgage payments, I think demand will increase if rates come down uh, at all, really significantly, right? If they drop into the 6.5 range, 6.75, heaven forbid they drop below 6, then we're really in trouble, right? Demand will come rushing back, I think. Um, so they're saying pending home sales, and this is interesting, are down 3.5% year over year, the biggest decline in over 3 months. And the Redfin Home Buyer Demand Index is down 18%, sitting at its lowest level since February. So home prices are, I'm sorry, the demand is crushed because 3.5% year over year decline in pending listings, pending homes for sale. Um, and then you also have 18% drop in demand. That's been bad for weeks now, months now. So, Mike, demand's not good. It's not good at all. Um, and so more houses are sitting on the market longer. You're going to see that in a second. We're also going to review days on market today. You should this and that data is awesome. Like you don't want to miss that data. That's really telling. All right, so let's look at the leading indicators. So 6.98% daily average 30-year fixed mortgage rate, up from 703 a week earlier, but down. I don't know how it's up because it's actually down from a week earlier at 703, but it's up slightly from 6.94. That's a year ago. So a year ago, it was basically what it is now, pretty much, right? Mortgage rates. The weekly average 30-year fixed mortgage rate, 6.99%. Now that is down 7.03 from 7.03% a week earlier. So mortgage rates right around 7%. Mortgage purchase applications increased 9% from a week earlier, but they're down 12% year over year. So they may have increased 9% from just the last update we had, but they're not tremendously high now. They're still down 12% year over year. Redfin Homebuyer Demand Index down 2% from a month earlier and down 18% from a year earlier. Touring activity up 28% from the start of the year. Basically up 6% year over year. Touring activity, number of people touring homes for sale. And then Google searches for homes, unchanged from a month earlier, down 16% year over year. All right. Median sale price. This is for just the top 400 metros. Median sale price now 393,627. They're calling that 394,000, all-time high, biggest increase in about 3 months, tied with increase during 4 weeks ending April 21st. So home prices continue, the median continues to go up, and that is probably a function of more expensive houses available to purchase versus affordable houses. It's not necessarily because people are, just buying more expensive houses. It's because the ones available to buy, generally speaking, are not affordable homes. And I want to know from you. I have not had anyone tell me this, to refute this claim that I have, that there probably aren't many affordable homes in good condition, ready to move into, under the median price in your area available right now to purchase. That's not probably where you're seeing the inventory. You're probably seeing the inventory in the the higher middle area. So if your median's 300, maybe you're seeing a lot of homes in the 350, 400 range, and probably more expensive homes on the market. We are seeing that, but at least I am, but I'm not seeing the affordable homes on the market. So comment and tell me, is that what you see? Because that's what I see. All right, median asking price $417,000. Median monthly mortgage payment, we talked about that, $2,829,000. Pending sales, 86,000 units, down 3.5%, biggest decline in over 3 months. Yeah, the market is horribly slow, horribly slow. New listings, 100,000 units, up 7.8%. That's kind of losing some momentum. You'll see that in a second. New listings are definitely losing momentum. Active listings, 939,000 units right now, almost 940,000. That's up 16.7% year over year nationwide. Um, Almost at a million units of active listings for sale. Months of supply, 3.2 months of supply. That's up zero point 0.6 points. But 4 to 5 months of supply is considered balanced. But I would argue that it's not balanced if the homes on the market people can't afford. So even if we get to 4 months, is that considered balanced if nobody can afford the houses on the market? I don't know. Doesn't seem to be balanced. Share of homes off the market in 2 weeks. Some interesting stats here. That's actually down 40 to 42.4, down from 48%, almost down 6 percentage points, meaning homes are definitely sitting longer. In fact, there's an article from Redfin on their website where you can see that homes are becoming stale. A lot of homes are just sitting longer, right? They just are. Median days on market, 31 days, up 3 days. So homes are definitely taking longer to sell. Share of homes above list price, sold above list price, 32.1. That's down from 35%. So people are, generally speaking, not overpaying as much for homes as they were before. Share of homes with price drop, 6.5%. That's up 2 points, highest level since November 2022. Yep, people were cutting their prices because a lot of them are sitting stale and they're not selling, especially more expensive homes. There's a home near me that not exactly in my neighborhood, but close, that is was listed at 1.2 million after somebody purchased it at 900,000 a couple years ago. That home just got cut from 1.2 million to 1.175. So they cut it $25,000. And I'm guessing they're going to cut it again because it's still, in my opinion, overpriced. Average sale to list price ratio 99.6. So people, and that's down slightly. So people aren't quite paying asking price. They're getting a slight discount, zero point 0.3 percentage points of a discount. So I guess that is a discount. Here in Columbus, it's actually over 100%. People are generally paying over asking. Still, it's nuts. But there are areas where I'm sure people are getting deals. Metro level highlights. This is for the top 50 most populous areas in the United States. So the ones that have grown the most year over year: Anaheim, Newark, New Jersey, New Brunswick, New Jersey, Nassau County, New York, and San Jose, California. These names are the same almost every week. The only one missing this week is Detroit, is D-Town. But generally speaking, these are all the same. These markets are just off the hook with price growth. Now, year over year decreases: Austin, Fort Worth, San Antonio, Portland. It's all about Texas, except you do have Portland. But yes, some decent decreases, right? Down 3.5% in Austin. Okay, so if you live in Austin, maybe you're seeing some nice declines in prices, some more normalcy, hopefully, right? Pending sales, homes under contract to sell: San Jose, Columbus, Ohio, where I am, Pittsburgh, Milwaukee, and Seattle. All are the biggest year over year pending sale increases. Houston, West Palm Beach, Fort Lauderdale, Atlanta, and Tampa, year over year decline in pending sales. So if you have, you should know this because you guys are smart. If you have increases of new listings and active listings across the board in most areas, but now there are areas with pending sales down by 16%, like Houston, down like 13% in West Palm Beach, Fort Lauderdale, Atlanta, and Tampa, you probably eventually will see some price softening and maybe declines, right? I would think. But still, I mean, if you think about it, increase in 13 metros pending sales. So most of the top 50 didn't increase. They actually went down in pending sales. So that would tell me inventory will build in those areas. New listings, San Jose, 39% increase in new listings. Wow. Man, if you're an agent there, I mean, because new listings are up a lot and pending sales are up a lot in San Jose. So if you're a agent and if you're a real estate agent in San Jose, you're probably busy, I would think. Pending sales are up, a lot of new listings. So San Jose, Phoenix, San Diego, Miami, and Denver. Haven't seen Denver on the list yet, but now it makes the list. New listings up 17.7% in the Mile High City. Atlanta, Chicago, Newark, New Jersey, Indianapolis, Minneapolis, all down year over year in new listings. So decline in 7 metros across the top 50 for new listings. So that means 43 of the top 50 metros had increases in new listings. So that's definitely going to build on inventory. All right, we're going to look at these charts for a minute and then move on. You got median sale price up 4.5% year over year. We know that, right? It's just looks like it's going to shoot right through the roof. You kind of see that. It's amazing that this just looks like it doesn't want to come down. That's just what's that's just, that's the nutty part. So it'll be really interesting to see as we go through summer if it actually does soften. Median asking price still elevated, but it's kind of trended flat over the last couple weeks. $417,000. Again, you list more expensive houses, and you're going to drive up the median asking price. And if more expensive houses are listed than affordable houses, then the ones that are selling are expensive houses because that's what's available to buy. And so the median keeps going up. Does that mean the median for affordable houses is going up? Probably, because there aren't any to buy. I mean, again, tell me, comment. I want to know: are you seeing affordable houses in your market just sitting there rotting? Affordable, like move-in ready or near move-in ready, pass FHA, pass VA. So no foundation cracks, big cracks, no roofs that need done, windows that are functional. Um, you know, the systems work in the house. Are you seeing those sit on the market for a long time? My guess is no. When I mean affordable, I mean under the median. And that's, I think, of what's going on. Home buyer housing payments, that's crazy, right? But it is flat over the last few weeks. So is that progress? Maybe. Pending sales are awful, right? Pending sales are horrible. If you're an agent, title agency, home inspector, maybe. I talked to a photographer who does photography for houses. Same thing, hurting big time. New listings of homes up 8% year over year. So new listings are up. That's nice, right? You got to see that to have more active listings. Now we've got active listings of homes for sale, up 17% year over year. But I mean, it's really going to have to take off to really accelerate. It's going to have to accelerate a lot to get over, you know, basically 2022. It's already over 2023. That's easy, but to bring us back to pre-pandemic, it's going to have to really take off. And that's going to be a factor of new listings, right? So new listings are up, but they're nowhere close to 2022 or 2021, the number of homes for sale coming to the market. So we need more new listings. 3.2 months of supply available on the market. That means if we stopped adding any houses, we'd have 3 and 3.2 months of available supply. But remember, that doesn't mean that those homes are homes that you can buy or I can buy or the average person can buy. That just means that there are homes available to purchase. So, like again, the $1 million house near me where I live, I mean, that's not a house I'm buying. And a lot of my clients don't buy $1 million homes. Some of them do, but most of them don't. So it's like, well, those homes are kind of irrelevant if they hit the market. Affordable homes is what we need. 42% of pending sales under contract within 2 weeks. So that's declining because houses are sitting longer, generally speaking. Homes sold in a median of 31 days. Same story, taking longer to sell homes in general. And 32% of homes sold above list price. People are still paying over list price for certain homes. My guess is it's affordable homes, but not in general, obviously, we're under where we were the last few years with how many people are overpaying for homes. 6.5% of listings have price drops. That just keeps going up because as houses sit, the only real, I mean, people people think that this is awesome. People think that like the marketing will sell houses. Like if an agent does his job to market the home correctly, it'll sell faster. Sometimes that's the case if your marketing is really good, you definitely get it out to more of an audience. But in general, what sells a house is price. I mean, it really does, right? The home has to be priced right. Not in the last few years. Last few years, homes could be priced wrong and they'd still sell. Like it all, I always scratch my head because I'm like, well, that home over there is priced wrong, but it would still sell. Now, homes priced wrong, too high, people know it, and buyers are smart, and they're gonna, I guess they're smarter than they were last few years. They're not gonna overpay. Not going to. Average home sold for 99.6% of list price. So that's my point, right? You can see where that was the last few years, well over 100 many times. People were paying over asking. All right. Redfin Home Buyer Demand Index down in the toilet. No surprise there. All right. So we're gonna look at a video, quick video from you know what? First, let's do Columbus. Sorry. Let's do mm, 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 mm. Well, I just got an error on my Streamyard. Um, something wrong with the Streamyard connection. So this is where I'm gonna have to actually stop the live stream, unfortunately. Let's see if I can bring it back. 1 second. Nope. All right. Well, I apologize, folks, but I've got an error with StreamYard. It won't let me recover it. It's basically frozen, unfortunately, and technical error. So um, I don't even think I can even share my screen. I guess this is why sometimes you don't do lives. But at least you know the national picture. That's too bad. I had some great data to share with you. But real quick, I'm going to look at this data and give you a quick stat here. So I looked at active listings, homes for sale, and how much they've changed year over year. This is astonishing. To me, it's astonishing. So you've got, if you look from May to May, so if I look from May of 2023 to May of 2024, out of the top 100 metros in the United States, only two of them had actual decreases in active listings, just two. And that was Las Vegas and Bridgeport, Norwalk, Connecticut area. So just those two metros are the only metros that actually shrunk with active listings. And if I look at it from month over month, in other words, what areas actually dropped month over month from a active inventory standpoint, there's only two metros as well, and that is Bradenton, Florida, and Cape Coral, Florida. So just those two areas went down month over month with active listings of the top 100 US metros. So no doubt there are a lot more active listings throughout the United States than there were last year, right? Um, so on new listings, now that was active listings. Let me tell you about new listings. And again, if it wasn't for my StreamYard, I'd be able to share this with you. All right. So if I look at just new listings, this is where it's really strange. There are actually uh, half of them. So half of the US metros, half of the top 100 US metros are uh, up in active listings year over year from May to May. Half of them, not 90% of them, just half of them. And if I look at the 1 month change from month to month in new listings, same story. About half of the top 100 metros had a 1 month gain in new listings for of homes for sale. So it's definitely spreading the amount of active amount of or the number of metros that are gaining uh, you know inventory year over year. And so that's growing. And as that grows, prices will tend to soften in those areas. So I thought that was interesting. And then days on market. This was like, I thought this was really telling. So the days on market year over year, how many is that? 20. About 20 of the top 100 metros actually went up in days on market, how long it takes to sell a house. But there are areas where it went down, where it actually went down. So, for instance, Providence, Rhode Island was down 38% year over year in the number of days on market. Akron, Ohio, how's that possible? I don't know. Down 36%. Some other, let me think about a big one here. Seattle, Washington, days on market down 27%. Boise, Idaho, days on market down 21%. Stockton, California, down 14%. Los Angeles, down 15%. So days on market dropped a lot in some of these areas, major metro areas where inventory seems to be increasing. So it's almost like it's the more inventory is kind of igniting, you know, the I don't know, the activity level of some of these metros because people were probably waiting for some homes to come on the market to actually buy them. So that'll be really interesting to watch if that continues because I thought days on market would be up across the country, but it's not. It's not at all. So not every area, is sitting on a bunch of inventory. Some of them are getting rid of it just as fast as they're selling it. I'm sorry, just as fast as they're adding it. So, all right. No comments. I don't see any comments at all, which is fine. I will get my technical stuff worked out. I apologize for that. Had some great charts to show you. Had a great interview by Glenn Kelman, where he basically says, "Hey, it used to be that New York was like the place that New York, California, people were like, I have to win the lottery to actually buy a house here." But now Middle America is like that, and I thought it was great how he summed that up. He says, people were really stressed out in high price markets trying to afford houses. They were doing everything they could to buy a house, to afford a house. Now, that kind of anxiety, he called it, which I thought was fantastic way to put it, is creeping into the affordable areas of the United States. That's what I'm seeing here in Ohio. I'm seeing that. I'm seeing people, um, first time home buyers, and I'm talking $200,000 price range homes. They are like completely stressed out that they can't find a house. And when they do find a house they want, they are dejected if they don't win the house because there's a lot of people after $200,000 houses here. So they get beat by a cash offer. And what happens? They're not depressed. I won't call them depressed, but they're definitely like, beaten down a little. And then they go back in and try to do it again. And then I have some clients that are taking a break. So that anxiety of having to own a house is like, I don't know, you can almost taste it. It's palatable. Like you can taste it in the air almost as an agent, which it's not a good place to be if you're a buyer at all. That's not good. You know, if you've been looking for you know, the perfect whatever for your house or the perfect gadget that you want to buy. A lot of it, is emotion, but we're talking about a house. And so that has to be, you got to take emotion out of that. Um, you have to just take emotion out of it. You have to. And I think that that's a great way that Glenn with Redfin explained it. I wish I could show you that interview. You can see it. It's on David Lynn's channel. But anyway, all right. Thank you for joining me today. That was the Redfin update. Lots of inventory building in a lot of areas. I want to know what's happening in your market, in your neighborhood. Please let me know. And if you have a metro you want me to review on a future Redfin update video, let me know, and I'm happy to do it. All right. Thank you for joining me. Like, subscribe. I'll see you next time on the next Redfin update.